All right, let's talk about MicroStrategy. When the crypto market is going absolutely wild and everything feels like it's in freefall, they have this incredibly bold strategy. So the big question is it unshakable conviction or is it just a massive, high-stakes gamble? Let's get into it.
So here's how we're going to break this down. First, we have to set the scene with the kind of market chaos that really tests everyone's resolve. Then, we'll look at the pretty surprising calm coming from MicroStrategy and its supporters. From there, we'll dive right into Michael Saylor's blueprint, what he's actually building. We'll explore his huge vision for something he calls digital credit, and then wrap it all up by looking at how this is, at its core, a massive 10-year bet.
Okay, first things first. To really wrap your head around what MicroStrategy is doing, you have to feel the environment they're in. And we're not just talking about a little dip, we're talking about a market downturn so nasty it's been called a bloodbath.
Yeah, that's really the only way to describe it, isn't it? It's that feeling when the market just turns on you. During one of the more recent downturns, people were saying it was just painful, terrible, like getting your face punched in. It's brutal.
I mean, just think about that number. A drop of $50,000. That is staggering. When an asset falls that far, that fast, it just creates this wave of fear, uncertainty, and doubt, FUD. And it's in moments like these that all kinds of crazy stories and narratives pop up that have absolutely nothing to do with what a company is actually trying to accomplish. So, what happens next is what's so fascinating. How does the company and its community of supporters react to that gut punch? Well, you might expect panic, right? But instead, what you see is this reinforced belief, almost like this is an opportunity.
Wow, this quote really says it all, doesn't it? It captures this core idea inside the MSTR community. The thinking is that this isn't some simple stock you just buy or sell. No, it's a really complex financial machine, and you have to do your homework. Some have even said you need to put in at least 100 hours of research before you can even really have an opinion.
And this is why. For the true believers, these horrible, gut-wrenching dips, they aren't a reason to run for the hills. They're actually seen as buying opportunities. It's a chance to dollar cost average, or DCA, which just means you're methodically buying more over time to lower your average cost.
And this, right here, just nails the entire philosophy. It completely reframes that gut punch volatility. It's not just a risk you have to put up with. It's the very thing that moves wealth from people who are thinking short-term to those who have the patience to see the long game. So this number is a pretty big milestone. 2,000 days. That's how long MicroStrategy has been on its Bitcoin standard. It's a commitment that has already survived multiple crazy market cycles. And that long-term conviction, it's all built on a very, very specific financial machine.
Okay, so let's get under the hood and look at the actual strategy. We're going to see how this all builds into this unique business model that Michael Saylor is creating. Because this is so much more than just buying an asset and holding it. It's about engineering this stable vehicle he calls a digital credit instrument.
When you first look at it, it can seem a little backwards, a little counterintuitive. But Saylor himself has laid out the mechanics of this thing. And really, it's a masterclass in trying to build stability in a very unstable world.
It all comes down to this very deliberate four-step process. Okay, so first, they sell a credit instrument. Step 2, a chunk of that money is held as cash right on the balance sheet. We're talking like a $2.25 billion reserve. Why? Because that cash guarantees dividend payments for years, which brings us to step 3. It strips the risk and the volatility out of their credit instrument. And the whole point, the final goal, is to generate a steady, consistent, long-term yield for the people who own the stock.
But of course, there's always a trade-off, and here it is. Instead of taking every single dollar they raise and plowing it into more Bitcoin, they hold some of it as cash. And Saylor himself admits that in the short term, this is slightly dilutive. It lowers the immediate potential Bitcoin yield just a little bit.
And this right here, this is the heart of the whole strategy. It's a fundamental choice. Do you want to chase a maximum, but way more volatile short-term yield, or do you accept a slightly lower yield right now in order to build a sustainable, less risky model that you know can run for a decade or even longer? It's pretty clear which path MicroStrategy is on.
So now that we've seen the mechanics, we can kind of zoom out and appreciate the grand vision here. This isn't just about managing a company's treasury. What they're trying to do is create an entirely new class of financial instrument.
And when I say the ambition is massive, I am not kidding. Proponents see this new digital credit as a potential replacement for a whole swath of traditional finance products. We're talking everything from high-yield debt to, get this, even savings accounts. They're positioning this as a fundamental game changer.
Now, the logic behind this is actually really clever. The idea is if you run the company primarily for the benefit and stability of your creditors, the people you owe money to, you actually increase the demand for your credit instrument and make it less volatile. And that stability in the long run is what ultimately benefits the stockholders.
And the scale of this whole thing is just huge. The target amount of credit the company wants to be able to sell, according to Saylor, is $10 billion a year.
And this simple little ratio right here is what makes the whole model scalable. It's the magic formula. For every single dollar of capital they have on the books, whether it's Bitcoin or cash, the goal is to be able to issue 10 cents worth of their digital credit.
Okay, so let's put all the pieces together. When you look at the whole picture, the market chaos, the conviction, the financial engineering, what's the big takeaway? Well, it really all boils down to a fundamental bet on time, a very, very long time horizon.
So this is the bottom line. The company would much rather generate a predictable 10% yield year in and year out for a decade than chase a much higher 25% yield that comes with all that uncertainty and volatility. The bet is that this consistency will eventually be rewarded by the market with a much higher premium, which means the patient stockholders win big in the long run. And this is why it all matters. The people who believe in this don't just see it as another clever corporate strategy. They see this entire structure as the smartest, most robust vehicle designed to capitalize on what they believe could be the single biggest opportunity for creating wealth in our entire lifetimes.
And that brings us right back to the central question. Is MicroStrategy actually building the blueprint for a new, more stable way to generate yield in our digital world? Or is this just a massively leveraged, incredibly high-stakes gamble on the future of a single asset? The truth is, the answer is still being written, and that's what makes this one of the most compelling stories in finance today. Thanks so much for joining me for this explainer.